Money matters and finances play a big role in our livelihood. So now as we face so much uncertainty, it's important to protect our finances and make the right money moves. Here with some expert insight on the stock market and tips for keeping our money safe is founder and president of Empyrion Wealth Management, Kimberly Foss. Welcome, Kimberly.
Hey, Aubrey, how are you?
So the stock market, it was up more than 500 points yesterday morning, but then it closed almost flat. Once again, we've got a roller coaster going on when it comes to the stock market. What's happening there?
Yeah, well, yesterday we tried to rally, and the bottom line was that with the coronavirus, supposedly decreasing, we were looking at reopening and getting our feet back for the third quarter and starting on very, very positive ground. And then all of a sudden, of course, Newsom said that we're going to basically retract that and close down our bars and our salons, so on and so forth. So with that, the market retraced all of its gains yesterday, took that as a negative, and that was the whole roller coaster ride just yesterday. But this is a daily event, right?
Right. No, we just do not know what's going to happen from day to day. It's so fluid. And as you said, bars, salons, gyms are shutting down again here in California, the stock market going up. Why is there that disconnect between the two?
So the disconnect, that's a good question. And a lot of people go, wait a minute, why, we're having all this corona and then we've got the market going up, what's going on? And the bottom line is that the market and the economy are not connected. I mean, that is the bottom line. And what that really is the markets are being fueled by eventually is really the backdrop of the Federal Reserve. So as long as the feds are going to continue to print money and to continue to back the stock market and back the bond market by buying high yield bonds, there's an assumption there that, at any cost, the feds are not going to let this economy drop. And so as long as we can keep that printing press going, the market will go higher eventually once we get it under control on the coronavirus.
So what do you say to investors? What should they be doing since the market is a little crazy?
Sorry, what was that question?
What should investors be doing since the market's a little bit crazy right now? What would you tell investors to do?
Well, investors should, they should do really three things. One is if, have at least 6 months of emergency money set aside, money that can pay your rent or pay your mortgage, pay your food, keep your doors open at home, right? And then the second one is if you haven't already invested and have kept investing into your 401k, make sure you're doing that, because if your boss is matching that, that's free money. And the third one is practice DARE. DARE is diversified. Make sure that you're diversified in your portfolio. We invest over 44 different countries and 12,500 different stocks in every one of my clients. Your allocation, how much to stocks, how much to bonds, make sure that's commensurate with your age and how you can stay in the market. Make sure that you always basically rebalance your portfolio. Like in March, we rebalanced all the clients' portfolios, and evaluate where are you in your life cycle. Make sure that your whole portfolio and your full financial plan is reflective of that. And I have a little saying, Aubrey, that says, stay diversified, stay your course. Make sure you have a plan for you. You are not Mr. Jones, your neighbor. You are you, and your plan is very, very unique for yourself. And if you can't do that on your own, make sure you get an advisor that can help you stay disciplined through this, because these are trying times.
Yeah, if you do have extra money, if you're lucky enough to have some extra money, any advice on where they might want to put it in the market?
Yeah, if you have extra money, you've done all those things that I've talked about. If you want to take 10 or 5% of your portfolio and over allocate in like the tech sector, or I also like the utility sector. Those are some areas right now that you can add money to, and you can do it even if you can't afford to buy Google at $1,500 a share or Amazon at $3,000 a share. You can do slices and fractional shares. Schwab has a program about fractional shares. You can buy Google even at $5. So look at those kind of programs that you can put into your 401k or into your IRA or just in your regular investing. But it gives you a little piece of that. You can watch your markets go up and you can watch your stocks go up. But when things go down, it's not going to affect your overall portfolio. And eventually, that's your lifeline. That is basically your paycheck when you start to retire. That 80-90%, that's what's going to produce the income for you. So you don't want to risk that. But 5-10%, that's okay.
Okay, that's good to know. And any long-term outlook, insight that you want to give us when it comes to the market?
Again, guys, right now, everybody in the media is doing this. I always call that, it's kind of like the investment pornography, right? It's like, you want to listen to what is the truth, and that's really hard to discern in the media right now. But look at the forest, not the trees, right? Look at the long-term perspective. I tell people, like, when they're in very volatile times, hey, are you going to be on this earth, do you think, in 10, 15, 20 years? And not only they say yes. And I'm like, okay, well, your investments are there as well. So you just want to invest all the time on a consistent basis. Dollar cost average, that's the best way to invest for long term.
Keep your eye on the big picture. All right, so we were talking about it. Things have shut down again. Last time we got a stimulus. Do you see another stimulus on the way?
You know, just the fact that we shut down again, and it's very disheartening to, salon owners and bars and restaurants. It's like they just got their feet going, they got their momentum going, and now they've stopped again. This start and stop might be happening for a while. So, it just depends, I think, on how long we're going to be shut down. But if it is for any long duration, like I talked to you before, that printing press, yeah, that probably will happen again. I don't know if it's going to be somebody less than $40,000 or the $75,000. The $1,200, we'll find that out, and of course we'll bring that to you right away as soon as we find that information out.
Okay, and for folks that have been collecting unemployment, they were seeing an extra $600 from the feds. Is that going to be running out anytime soon?
Well, it's supposed to run out July 31st. So that, along with the PPP, has been exhausted. So this is a big turning point. At the end of this month, we're gonna really see what is going to happen to the economy and what is going to happen to the markets. But I think that the feds will not let things happen. They'll continue with their loose monetary policy and continue to help.
All right, Kimberly Foss, I'm going to have to stop you there. We're running out of time, but thank you for joining us and giving us that great insight.
This interview involves commercial content. The products and services featured appear as paid advertising.